As a merchant selling on any kind of platform, you are always a little bit tied to that particular platform and a little bit dependent on its growth and trajectory. Over the year, Shopify has lost 73% of its value on the stock market. So basically, it has plummeted, as you can see from here, from 170 USD all the way down to like 30s and now trading a little bit over 40 USD. And this is obviously quite a huge drop, as you can see from this. So basically losing almost 3/4 of its value. So this kind of begs the question of what's going on with e-commerce in general, where does Shopify fit into the play, and should you be concerned as a merchant? Because you are, of course, dependent on the platform's growth and future glory in a way that like they can still invest to make the platform better. And as a merchant, you'll benefit from that. Now let's take a look at a couple of different stocks also here, and what's going on internally, externally, and also on the other kind of macro environment. But before we do that, if you haven't already subscribed to the channel, normally this is very, very e-commerce focused, helping store owners improve their storefronts to make the most out of their existing e-commerce traffic. Make sure to subscribe and like this video, so that you'll have more of these videos coming your way on YouTube suggestions. Alright, so first of all, if you look at the other big players like Amazon.com, down 13%, Walmart, down 14%, they don't seem to be that impacted by what has happened here on the past few months. And this is, of course, like quite concerning when it comes to Shopify's competitiveness, because I know Shopify is certainly a competitor of Amazon, and they are battling it out in terms of who gets those e-commerce dollars. And Amazon, in terms of the market cap, is almost 30 times bigger, so 1.45 trillion compared to Shopify's 50 billion. And this, of course, is very much a David and a Goliath type of battle. Now, here, let's first look at it from a macro perspective. So when you have these future cash flows that are going to be into the future, well into the future, and you have interest rates going up, that does put pressure into the stock price, because now investors have alternatives, and those alternatives are these loans that are tied to interest rates, basically. So you can get a alternative that is more secure often and provides some kind of return, and as an investor, you might look at that as more favorable. And then the stock simply has less demand as you have other alternatives. Second way to look at it is from the internal perspective. So you have these kind of competitive modes that still very much exist for Shopify. So if you look at the Shopify's pros list, so this is from Tool Tester, and these are the things that they have listed. Ease of use, variety of designs, flexibility, a scalable apps and community. Some of these are very difficult for competitors to just come and model and copy, because if you have been building your apps and community for several years now, it's difficult to get to the same level with your e-commerce platform. So that's one where you could consider this to be a little bit of a competitive mode that is difficult for other players like, say, WooCommerce, Magento, BigCommerce, PrestaShop to come and play on those kinds of things. Same things goes for things that they've developed like ShopPay, and then of course all the different themes, etc. that they have. So they still definitely have sort of their competitive advantage, as you can see also from these kind of comparisons. So Shopify tends to win on all of these when it comes to the overall experience. So if you look at these star ratings, and this is from a bit of an independent comparison, so you just see that Shopify basically has very little weaknesses, whereas Squarespace, for example, might have weaknesses on product variants, WooCommerce has weaknesses on SEO, BigCommerce has its own weaknesses, etc. Where Shopify tends to be pretty solid here, all around the board. What this usually means is that merchants will not have a big pain point to switch over from Shopify, and as Shopify gets more of a household name. It has this reputation of being a superior platform. And as a superior kind of default choice, it can have its flywheel turn faster and faster, where the more merchants they get onto the platform, the more they can develop it. And the more they can develop it, the more they get the merchants on the platform. So from that perspective, they have this pretty well covered. As we can see, this kind of flywheel concept, where you would get more merchants to the platform so you can improve the platform, has been happening for Shopify. So here is the market growth for the last 6 years, so bringing that to the external perspective as well. As we can see, Shopify has been growing fastest out of these companies. So you have 4.4% growth in 2022. The closest competitor was able to grow their thing 1.1% during that time. So that's 4x the growth of Magento and like several times the growth of any other platform there. So you just end up this big giant when it comes to the e-commerce CMSs. And that also helps provide a competitive advantage, because now you can have more data servers, you're faster, you can build more features, etc. So you just overall have this opening and lengthening competitive advantage over time. Now, there are, of course, problems with these kinds of things. And in general, Shopify also has been quite vocal about this. So they had to fire 10% of their workforce, partly because of this drop. So they basically had this bet that this trajectory will continue on. But what happened instead is that the e-commerce adoption rate, at least in the US, but this is probably very similar locally, or globally rather, is it ended up kind of reverting back to the mean. So there was this pandemic bubble, and a lot of people went to e-commerce because of that. And then as pandemic has gone away, people have reverted back to their normal shopping patterns, more or less. And here, it's interesting to see how this continues, whether you get back to the curve or whether some of these forced adapters had to basically realize that e-commerce might be a better way for them. And this would continue a little bit higher. But this was the bet that kind of surprised us all, that we expected e-commerce to take a leap over several years. When pandemic happened, we didn't really see that this curve could ever go down like this. Perhaps would have expected that it like flatlines, but doesn't go down as aggressively as it did. So there, this surprised many people. As you can see, there's a lot of smart people on Wall Street, and they didn't see this coming, at least not this drastically. So those are some of the things here. Now, I'm quite convinced about Shopify in general, because of their size, they can invest into different things and take a little bit of a long-term view as well with this, because they have that capital to do that. And they just announced this partnership with Klaviyo as well, where just a couple of weeks ago, this is now the default platform for Shopify Plus merchants. And also you have a case where now they can make Klaviyo better and Klaviyo can make Shopify better. So you have this nice synergy here, as many of the companies looking to acquire other companies state this as their main reason for doing that. So here, probably some good things coming out of this. Of course, probably not that good for the other e-commerce CMSs, but hey, it is a way for Shopify to compete also with the other options. Now, this one is probably a bit more about the overall growth, as you have that kind of high expectation of more and more consumers going online, more and more of that happening through e-commerce, and then like Shopify taking bigger part of it. Now we might be looking at a little bit of a smaller pie and a longer, more slower growth as opposed to this rapid balloon. And that's what I believe, along with the interest rates, is happening to Shopify. So all the internal components are still there. It's probably just going to be a tiny bit of a slower build-up for this, but I'm very positive about the platform still in general. And nothing major has happened here from my perspective, even though like you had this pandemic in between. If you look at this graph, we are right around the same where we were right before the pandemic, and a lot of stocks reacted very, very unusually to the pandemic. So if you look at the Zoom, for example, you have a very similar case where it's back to the pre-pandemic levels. So you probably had a lot of adoption there. This became a household name, but they haven't really been able to capitalize on it. And there's a lot of similar cases all around the tech world. So that's that, a little summary of what's happening with Shopify. No need to worry too much about it. But let's keep an eye on how things go from here. I think this is a nice public display of how the company is doing. But it is very tied to their ability to generate profit, which of course is tied to their ability to have happy merchants and have those lasting competitive advantages that investors are then willing to pay up for. Alright, hope you enjoyed the video, a little bit different than most videos on this channel, but definitely subscribe to the channel anyway, because as an e-commerce merchant, I can help you with these videos to get the most out of your existing e-commerce traffic with conversion, average order value, optimization, a little bit of purchase frequency optimization as well. So subscribe, like the video if you liked it, and if you are interested in having us take a look at your store, and we have a ton of optimization experience from e-commerce stores, Shopify stores, etc., go to crogurus.com and let's take a look. Cheers!